In this video, I'm going to show you 4 ETFs I use to write covered calls, knocking it down, literally printing money so I can buy dividend-paying stocks. Monthly dividend-paying stocks, for which I'm going to show you one at the end of this video. But I've got 4 ETFs I'm going to show you that I write covered calls on. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, I'm back behind the mic, fired up. We're going to talk about some ETFs I actually use to write covered calls and then buy dividend paying stocks. One of the things I absolutely despise is going to YouTube and seeing people talk about ETFs that they probably never invest in. They talk about passive income strategies and all of this to generate that YouTube money. And I'm here to tell you, what I do here at this channel is I show you my trades, we talk about it, so maybe you learn something. So today, these 4 ETFs that I use every single day to generate premium, writing covered calls and selling cash secure put, we put that money on the table and then I take that money and buy dividend paying stocks. One for which I've owned since 2011, and I'll tell you what, love how it pays monthly dividends, knocking it down with my dividend tree. I have a garden of dividend-paying stocks. I call it my dividend grove, where I see all of the effort and work that went into my covered call writing, and I turn that into passive income buying dividend-paying stocks. So hey, look, that's what we're going to talk about today. So if you like anything you hear, I want you to subscribe to the channel. Come back, show you my trades, we talk about it, so maybe you learn something. Hey, look, if you like the video, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is this. I'm showing you the phone app. Every single member gets access to the phone app. And the check mark means I'm winning. And we've been doing a lot of that lately. See, writing covered calls allows us to win 2 times out of 3, for which there are only 3 possible outcomes. It's putting the odds in our favor as traders. Most individual traders lose money. But when you sell premium, you have a chance to win 2 times out of 3. I talked to somebody yesterday about my trading, and I told him, I do not buy and hold. Sure, I have a buy and hold portfolio, and I collect dividends from it. Typically, I don't trade those stocks because they're not optionable, or the options are pretty darn weak. But what I do is sell premium in my other account, and that's the only kind of trading I do. And we don't get fancy with all these different combinations of buying options, selling options, spreads, iron condors, this, that, or the other. Look, keep it simple. Say this with me. Keep it simple. Buy a stock, give somebody the right but not the obligation to take it away from you at a time frame you pick, at a price for which you would like somebody to buy your shares. And then they'll pay you the per share premium. And we stack that money on the table over and over again. So that's what I'm going to show you right now. 4 ETFs for which I use to do this so I can generate that money, literally print money out of nowhere and then buy those dividend paying stocks, growing my dividend grove, for which passive income, I collect dividends every single month, paying the bills, living the good life. So let's go ahead and get to this. If you wanted to be a member and get access to everything I'm doing, everything you see here is what the members actually saw, they got. We talked about it. I did videos. These are all things you don't get here. So what I want you to do is go to cptdashboard.com, click Upgraded Dashboard, get your 1 free month offer. While you're there, click on Free Spreadsheets. Those spreadsheets have been there forever. I want you to use them. Always keep your numbers in front of you. You're not going to be a great trader if you don't keep the numbers in front of you. Use my spreadsheets. cptdashboard.com would love to welcome you aboard. Now let's talk about these ETFs I've been using. Now, for a lot of you, you already know what they are. What I want to show you is how frequently I actually use these stocks. See, it's one thing to come on YouTube and talk about 5 unique dividend stocks and then never own them. Not me. I'm going to talk to you about things that I own, I use to trade, because I can then talk about it. I actually know how these things trade because I've made money and I have been burnt. So if you're going to listen to anybody on YouTube, please, make sure they're using the stock or they have bought the stock. I'll never forget There's a YouTuber with 100,000 subs, and he's literally in the basement in COVID, and he gets a little YouTube success. He's telling us to never sell 3M when it's trading at 250. Right now, I own 3M at 90. Listen, do your due diligence, put your work in, but more importantly, own the shares, feel the shares, so you can then trade them. And that's exactly what I do here. I show you my trades, we talk about them, so maybe you learn something. Look, man, YouTube pays me about $100 a month. I come back to pay it forward from my mentor helping me for over 6 months to a year learning how to sell premium. And I came back and I did video after video just showing people my trades, talking about them, so maybe you learn something. Maybe you get closer to it, and maybe you too can have your financial success. So here's the deal. We are talking 4 stocks, and these are simple ones. I love them. We're going to talk about them. We use FAS, TNA, TQQQ, and YINN, YIN. Those are the 4 ETFs. Now I'm going to talk about each one of them real quick here because you need to understand what these ETFs are. They are 3x leveraged ETFs to indexes. I'm going to talk briefly about those indexes, but you have to understand these are ETFs that mirror the real ETF, the 1-for-1 ETF, but these are 3x leverage. I'll give you an example. A lot of people buy the SPY. The SPY is an ETF spider to the S&P 500. Well, you can't invest in all 500 shares and rate covered calls or do what you do. So you buy the SPY. And as the SPY moves, the S&P 500 moves. And that's how people gain access to investing in the S&P 500. Well, there's a 3x leveraged ETF to the S&P 500, and that's UPRO. That's a 3x levered ETF that we can buy and write covered calls against and collect some 3 times the premium. And at the end of the day, it's an index. A lot of people say, man, you're talking about 4 risky stocks. Are they risky? See, the way I see it, I'm investing in the index. You're standing there investing in SPY, I'm investing in UPRO. They're volatile. Say that with me. They're not necessarily risky, they're volatile. And if you can't handle the volatility or the swings, then yeah, you're going to have a problem. And you're going to associate that volatility with risk. But at the end of the day, that 3x leveraged ETF moved based on the index. So if the index is down, you're going to be down. And if the index is up, you're going to be up. That's how I see it, and that's why I largely use these 4 ETFs, because I'm trading indexes, and indexes are diversified. How many times have I told a story where I woke up one day investing in Win? Win was trading at 200. We find out that Steve Wynn's messing around with secretary, and the stock falls to 90 bucks. Individual stock risk absolutely, to me, defines risk. Whereas an ETF, we spread that risk out amongst so many stocks, sectors, and we're able to invest in them. Let's talk about the 2003 usage of these stocks. You can clearly see over here where I'm investing in these stocks throughout the year. You can see this is December. These are when I open these trades here. When you see the far left column, that's when I open the trade. And you could see how many times I'm using these 4 stocks: FAS, TNA, TQQQ, and YINN. And this is just 2023. We're not even at the middle of the year yet. And I have been using this all year this year. Let me show you that. I absolutely love using these 4 ETFs. I'll tell you what, we're making a lot of money. Look at this green column right here. We have been using the in the money covered call, the weekly in the money covered call, where I will buy a stock and actually give somebody the right to take them away from me cheaper. And what we do is we collect that time value premium as our profit. You can see right here, TNA in red. I bought the shares at $36.59. I gave somebody the right to take them away from me at $35. They paid me $2.09. The total profit out the door when they took my shares, in this case, was $1,000. And we had our shares taken away in about 5 days. That's what I love to do with these ETFs, because a 5-day trade can render some 1.5%. And I do this every single week. In fact, I'm going to show you trades right now for which I have this happening. You can see TNA right here. I bought the shares at $39.18. I'm giving them away at $37.50. They paid me $2.38. Of that $2.38 is intrinsic value, from the price I paid to the price I'm giving the shares. Nobody makes money on that. That's intrinsic value in the option. I collect the difference, and that is the time value difference. If my 2,000 shares are taken away, I will make $1,400 this coming Friday. That turns out to be about a 5-day trade, knocking down some $1,400. Let's go ahead and take a look at the charts of these things just so we could talk about it, and we could talk about what each one does. Now, I'll be brief because you can clearly go to Yahoo Finance and find this out all yourself. Right off the bat, TNA is the small cap bull to the Russell 2000 small cap. So these are small cap stocks. There's a basket of them, and there's actually a larger ETF out there for which this levered ETF was created. So this one's called TNA. And if you scroll to the right, you can see exactly what it does. So we're investing in the small cap sector. So if you think the small cap sector is going to go higher, well, this is where you want to trade in TNA. Or you can trade, if they have it, ETF Spider on the small cap Russell 2000. I like to use TNA. We get that extra juice. Been using it for years. Well, the TQQQ is an absolute rock solid play for me. I've been using this since COVID, and I'll never forget. During COVID, when we were at the bottom of the bottom in March, I was able to write a cash secured put for 12 months on TQQQ. They paid me some $18 a share, and that would have been $30 cash on cash for holding the money to buy somebody's shares come 1 year later. And I'll tell you what, that trade ended up pocketing me about $15 a share as the stock started to rally higher, because remember, cash secure put lower, the stock's coming out of the pandemic, and as it goes higher, it's moving away from my strike price. So I bought that back for cheaper. We brought that money back into the account. Tell you what, we could have made, had we held that position, 30% cash on cash. Why do we make so much? It's a 3x leveraged ETF to the NASDAQ. So when you think of the NASDAQ, you have the QQQ. Well, I use the TQQQ because this bad boy is a 3x leveraged ETF from ProShares. And I'll tell you what, the premiums on a 30-day trade, just an at-the-money strike, right? I buy the shares at 57.41. I sell the 57.50, giving somebody the right to take my shares at 57.50. I can make some 8 to 9%. And I'll tell you what, that's just in premium. Love the TQQQs. Again, go to Yahoo Finance, find the TQQQ, and you can see right here in the lower right what it does. Now here's another bad boy I've been using all year. Now it's getting kind of high, and I was trading this sucker when it was at 50. I was telling everybody to buy it when it was at 50. Well, yeah, it's trading at 95 now. The reason is this is FAS. This is the 3x leveraged ETF to the financials. So if you want to invest in the financials, you'll invest in the Spider ETF. I love a little juice, so I invest in FAS. And FAS has absolutely rocketed higher, and I absolutely knew this. This is where it's trading at 50. I have all of those trades where I'm cherry picking all kinds of covered call trades, making 10% like it's nothing. And then it finally gets on its horse as the financials start to move higher. So does FAS. And now it's trading for $95 a share. I'd still write covered calls on this bad boy, but I have my money elsewhere right now. And right now, I absolutely love Yin. Yin is the 3x leveraged ETF to the large cap China stocks. We're talking Alibaba, JD.com, BidU. This is a play on China, but it's a play on big China retail. And my take is this: big China retail defines China's economy. At the end of the day, man, it moves with Alibaba. And Alibaba's not even the biggest stock these days in the Chinese retail sector. But Alibaba's that legacy stock. Everybody knows it. Even I have a position in Alibaba. I absolutely love the premiums Yin will pay because I will buy the shares at $17.50, and I could write a 1 week covered call giving my shares away at $17.50 or even $17 and collect nearly $1. At the end of the day, if I'm making $1,000 a trade every single week and we have 3 or 4 of those happening, that is my goal. Yin is one that I absolutely love, but what I'll tell you is this: Yin has absolutely kicked me in the nads since I've owned it. See, I got involved with Yin when this sucker's trading at 21, and I thought 21 was a good number, and you could see it traded a little bit. I thought Alibaba was going to get on its horse and go higher. It didn't, so of course it kept drifting. it keeps drifting, but we still keep using it. Notice how it's bouncing off of 14 quite a bit here. I absolutely love it. Every time it gets down to 14, we might buy some shares. We might buy a Leaps call option. We then write some covered calls using the poor man's covered call. And in fact, here is where I'm controlling some 4,000 shares using a poor man's covered call. You can see right now we've generated some $11,200 in premiums. We're probably going to lose money on the Leaps call option, but at the end of the day, those premiums plus the sale of the Leaps call option is going to generate some 61% or $11,000. And I'll tell you what, we started this trade December 4th using these levered ETFs, understanding them and knowing that they're volatile, not necessarily risky, they're volatile. Well, if you can handle the volatility where yen goes from 22 to 14 and then back to 18 and down to 14, if you can handle that, then you, like me, can make some serious semi-passive income using these ETFs, writing covered calls or doing cash secured puts, taking that money and then buying a monthly dividend stock. Let's go ahead and talk about that monthly dividend stock that I'm going to buy this week with these covered call premiums. Remember, go to cptdashboard.com, get your 1 free month offer. My members get all of this. They've gotten all of this. I've had the membership now for 5 years. Absolutely love it. They know when I'm getting involved in any of those plays. And to be honest with you, I'm doing a lot of those weekly covered calls. They get every single one of them. And when I buy monthly dividend stocks with the money that I make, well, they get that too. cptdashboard.com, click Upgraded Dashboard, get your 1 free month offer. Now, finishing up the video here, we're talking about CHY. This is Coloma's high income closed-end fund for which I generate around 10 cents a share per month, every single month. Now, I know for a lot of you, man, closed-end funds are not exciting, and they do not wake you up in the morning. But here's the deal. When they're trading at around $12 and they're paying some $1.20 a year, that is a fat 10% cash on cash. And that's what I've been doing since 2011. Look at all of these dividends. And this isn't even 2011. This just goes back to 2020. Every single month, they pay that 10% dividend. They're a high-income debt seller is what they are. Colomas has many of these funds. I have CHI and CHY, and we've been using them since 2011 to buy shares, and they will pay me 10 cents to 12 cents a share. CHY sits in my dividend grove. It's one dividend tree that just keeps bearing fruit every single month. I go out there with my basket, and I'm just picking the fruit. We're paying the bills, and we're living a good life. Right now, I'm using CHY, CHI, EOS, ETV, QYLD, and I have some YieldMax ETFs such as PYPY, Tesla, Coney, and QQQY. We're going to add some different ones soon. So again, stick around. These are all monthly dividend paying stocks that become passive investments when we write covered calls, take the premiums that we make, and then buy passive income dividend paying stocks. We go from the trade to the wealth mindset. So look, what I want you to do is subscribe to my channel because this is what I talk about, things that I use for my trading. I don't just randomly pick 5 different things and then tell you about them because I went to Wikipedia and I read up on them. Look, I actually use these things, generating real money, and then what I do is I buy passive income closed-end funds to generate money in retirement. Hey, look, if you like the video, bang that like button. It lets me know you like what I'm doing. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.